All right, before we start, I need you guys to go back, read that disclaimer again. The things that I'm going to show you here are going to be very enticing. As always, consult with a professional advisor of your choice before putting your capital at risk in these very volatile markets where you can lose not some but all of your capital if you don't know what you're doing or if the market goes against you. The information provided in this video is not to be construed as financial advice or trade signals. Okay, trade at your own risk. And that's not what I'm doing here. We're just going to have some fun. We're going to talk about the banks. And this is something a lot of people been overlooking, but what I found here, it's quite astonishing, and you're going to want to hang around for this. I can't say for sure. Some things I can say comfortably, but oh my God, it's going to be a fascinating one. And I'm going to have some stuff to say about my opinion on this stuff too. Beginning here, we're looking at JPMorgan. I think we've been duped. I think that this industry they've known about something for a long time, going back to April. We're coming up on July. And they knew that this wick here that you see on JPMorgan, that's April 1st. We had that drop. So yes, the markets were down for 1 month for the month of April, and not even that, just a few days, because they started bouncing back almost immediately. And this would take us into May. See, May 1. So beginning on May 1, that started. Same theme you guys have seen me riding with. I don't have a harmonic. Somewhat we will. There's going to be a harmonic, but not one of your triangular looking patterns. But this had bearish reversal. Remember our three bar reversal? This is going to be astonishing, people. Going to hang in here. Bearish reversal. Amazing doji. And then you don't get confirmation yet. Okay. So on your third bar, you don't get it. You don't get your confirmation, but you did get it the next month. You did get it up here, definitely closing above. So you don't have confirmation in this area in the typical 3-bar reversal that we look for, but it's there now. Now, what's more astonishing about JPMorgan is, guess what's missing? Remember when we say look left, there's nothing. There's nothing. There is no resistance. There is no resistance. And what that does is that opens this up to easily. And I went conservative on the extension, the price targets. I went very conservative on them, up to 389. Remember, there's no ceiling. There's no ceiling. So that is simply, these Fibonacci extensions are simply an extension off of this level here, this low to the high here. And you can already see the 3-bar is in action. Now, if we did want to go ahead and lay some harmonics on it, let me say this first. I could have ran this extension from here if I wanted to and had even higher projected targets, but I went conservative. I drew those targets off of this starting point here. Basically, it's a part of this same action. So technically, I could have went either way. This is all a part of the same move. I could have started here, but I just wanted to go from the initial move here and there, and then come up here to the high, and then those are the extended levels. And you see, it is in action and is at work. This one is okay because there was no confirmed entry on JPMorgan until now. Monday would be the confirmed entry for JPMorgan. But let me go ahead and still just go ahead and talk about what's happening here real quick. So from the low that we're calling the low here, it's really not this part, but we'll say from the low here, we'll call that the starting point, and this wick up here is the high, and that gets us a 382 retracement. Okay, that gets us a 382 retracement, and off a 382 retracement, a Fibonacci 382 retracement always equals a 1618 extension. Okay, and then your A to B is equal to CD pattern will complete right there. So if this is A and this is B, and you clone that, and if A to B is equal measure move, and if A to B is equal to C and D, that looks like this, right up in that zone. So here's the target area right up here. Okay, so I'm a little upset, like when you start bringing the media into the picture and these fundamental analysis, and when you're really good at your technical analysis, I miss here and there, but when you're really good at your technical analysis, those projections will usually dwarf or trump what they come back and talk about on the fundamentals. Fundamental will say that 287 is very high, you know what I'm saying, or what they would call this is high price or overly optimistic. They would say that 287 to 389 is more than $100 on JPM, and we're on the monthly chart, so this will take some time to get there. I put it like this. This current bull run started in October of 22. This one started in April of 25, so you kind of got a ways to go. But that would be for long-term holders and people with a lot of capital who could really take advantage of something like this. But again, I'm kind of, what is it called? I'm kind of a little triggered a little bit, you know, about, you know, how there's no way that little old me can spot that and knows about this, and not too many others do. It's kind of shocking. Let's just keep going. So it's JPM, and we're doing major banks, major financial institutions here. Beautiful work. Starting this run, October of 23, and then here's your little correction. Your correction is about 50%, might be 60%. So we're going to bring the target's going to be down something, but just look at it from the low right there to the high, and I suggested 50, maybe even would have got down to the 618. Let's see, but it doesn't really matter because that's just price action through. This is really a 382 retracement, really is what it is. But for the sake of consistency, I'll put the 618 on there. But you can see this is really a 382 retracement. Price wicks down to the 382, and that's going to give us the same projection, a 1618 upside. Okay, so from the low to the high. All right. Now, this one is a little bit different. OK, so some very, very high targets. We are trading in the 140s now. We're looking at as high as 186 again. So we got the retracement 382, even though he dipped to the 618. So I don't like this, but it's gonna force me to not use the 1618. And this is going to force me, because the price action did visit there. It did visit that area. It's going to force me to have a lower projection on there. All right. So projected target's 167. So somewhere between this range here, between the D completion and the 1414. I really would like to see it hit that 1618. But this one was actually activated. You see I have it crossed out. This one was activated when May 1st opened. May 1st opened. We're going into July. We would have been in profit for 2 months, riding from 120 up into the 140s. Now, I will say this. There is another level of confirmation that is required, and that level of confirmation is a break and close above 142. So there's a couple of more dollars. So there could be another few weeks or something like that. We do have to close, even though price action was good using the 3-bar reversal to get up there and start testing it. This is still needs one more layer of validation, and this is going to be green, even though we don't have green candles, but just to show a bullish candle, still would require a candle to close. Once that happens, this takes the ceiling off. That takes the top off of Morgan Stanley. There's no ceiling after that. After that closes, that's what opens up all this other stuff up here. The ceiling hasn't come off yet. It's at the ceiling, but once it gets through it, I don't think there's any looking back. And I think that kind of gives us a financial outlook, how strong things are, and where the institutional money is going and what the big players are doing. There are positive projections for the U.S. and probably world currencies that I think that the people in the media have been afraid to speak about, because this is right in front of us. Why so much negativity? Why so much doom and gloom? Why the word market crash should have never been mentioned off of 1 or 2 days of a simple reaction that was really the beginning of something else. Okay, so this tariff day, that was just a reaction. Things have been so much more positive since that. Let's move on. Let's look at Goldman Sachs. It's the same story, people. It's the same story. And this one right here is actually a retest, kind of sort of a little bit of double bottom action here before he takes off and starts doing his thing. Okay. And it's the same story, rinse and repeat. Okay, bearish reversal, doji closing above, entry back on May 1st, off to the races. And now this one is Goldman Sachs is confirmed. He's got a higher close on the month than May. He's done. I mean, this would be the second level of confirmation. What do you see here? There's no ceiling. So if we do the same thing, if we grab the extension tool and go from the low wick here to the high, and we're going to use that 1618, we're going to go all the way out to the 1618. We're going to be very aggressive on this outlook, and then we're still going to use our A to B is equal to CD action because the market continues to make these equal measure moves. A to B, very, very simple stuff. You guys see how clean these charts are? It's not a whole bunch of stuff. I could really do this stuff with nothing but the fibs. Okay, this is also actually 2618 action, double bottom followed by break and close followed by 618 retracement and entry. It's actually 2618 technique entry. Close enough. He didn't quite hit the 618. But this would be the 3-bar reversal combined with the 2618, the 618 retracement triggered after the double bottom. And this was actually the confirmation that this trend was going to continue. Did you hear what I said? The confirmation for this trend that is taking place now actually started in February. Don't worry about the correction. Everything had already been confirmed. There had to be a correction. There had to be. But this is the 2618 technique right here. Very, very, very powerful. Very, 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 very powerful. Glad that we were able to see that and talk about that too. So yeah, you can see what that looks like now. If you want to know more about the 2618 technique, I do have a class on this particular pattern right here. The thing about it is bringing in the 3-bar reversal to get involved and combined with the 618 retracement makes it more probable. Because now you're starting to combine things. So your 2618 is probably about 65% success rate. Trend continuation on a 618 pullback is probably 65%. When you throw in something that's in the 90, 80 or 90 percentile success rate, like a 3-bar reversal, you're taking the top off this thing. All right, cool. So projected targets 833 on Goldman Sachs. And it's already the top is already off. There's no turning back. There is no resistance. There's no ceiling. The top is off. With lots of momentum, 75%. Remember momentum indicator. So a lot of people think that you buy and sell at these extreme levels on RSI, but it's really measuring the momentum. This is telling you there's some very serious momentum in here. If we did something like brought on volume, you can see it's just pumped lots of volume, and that's when you want to be in a trade. You can't enter this trade because there's no entry. You'd have to wait for something else to occur. Okay, not that I would advise anyone on when to enter or anything like that, but hopefully you got the gist. A lot had to go into that one right there. Take a screenshot, take notes, watch it over and over and over if you need to. Bank of America. Who would have thought? Same thing. They played us, okay? So this run started, of course, in late 23, comes up to the ceiling. So now we know that that's the ceiling, okay? So we should not be that concerned with price getting a little bit of a fallback, a little bit of correction at that point. Resistance. So we know that there is resistance right here. So even using the 3-bar reversal, okay, and then these targets up here, these targets 62, 57, 54, using the 3-bar reversal, right, which is engulfing candle, doji, and then our entry candle, right, and then we would use the extension. You know, we could go conservative, go 127. We could do whatever we want on this, and we could still use the A to B is equal to CD pattern for targets if we wanted to target D to complete it. And now we'll get to the part about this one, because this one actually does require confirmations. The first one that I've seen so this one's a little bit more conservative on the targets right up here around 56.25, somewhere in this zone. We'll just call it that whole area. But the problem with this one is you can't not get that until we break and close above. I think it's going to be $48 and maybe 8 cents. So that does have to happen as well. You know, you got to break out, or otherwise price gets consolidated in this area, and this one wouldn't happen. Other things that I talk about, Goldman Sachs, there's probably not going to be too much consolidation, but they all move together. So who knows? Maybe what's happening with Goldman Sachs will carry B of A through that to close beyond it. But either way, what kind of pisses me off is us not really being as sharp and on our stuff like we should have been. And there would have been a beautiful entry at $44 up to 48. Just imagine an option on that. If you go pull up your options pricing to see what we could have did with that. And it's, look how cheap it was. You know, we would have been, you know, $44 option is really not that much. All right. Another big dog, Wells Fargo, rinse and repeat. Okay. Same thing. Bearish reversal. And if you want to know more about the 3-bar reversal pattern, I do have, I think, 2 or 3 videos on it in the Harmonic Trading Academy. It's one of the newer patterns that we've been focusing on. So we've done a couple of classes on it. So go over to the Harmonic Trading Academy playlist. And any of those, we have the bullish strategy for it, bearish strategy for it. And then we have some kind of like when we first decided that, hey, we just got to bring this in here. There was no way to not start incorporating this into my trading system, at least. So a couple of ways to approach this here. I'll talk about 2 different ways. Conservatively first. Conservatively, and it's the same stuff. Let me just do it real quick. Same stuff. Bearish engulfing candle, doji, entry candle. Okay, entry candle right here. So that's the entry, and would have already traded this up from 74 to 79. So already a winner, especially for having an option on it. I'm really kind of pissed that I didn't have my eyes on this, but conservative entries, the targets that you see. Now watch this, because it's going to get really good. Remember, this does have a ceiling. This does have a ceiling as well. Okay, he does need to break and close above 81.65. He does need to break and close above that first. But if that happens, there's no looking back. If that happens, there's no looking back. And remember, there's some catalysts that could drive it forward. Now, remember, I was saying that, I drew those targets off of this price action right here, these little tweezers right there. Okay, I drew it off of that. Imagine if I used the whole low to the high, what the targets would look like. So for the sake of that, I'll just get these out the way. And we're just going to get really crazy for a second and go from the low to the high and come back. And now that is kind of making more sense, because now you probably got a 382 retracement, which is going to give us a 1618 extension. So here's the 1618 up here. So 119, and this is Wells Fargo. And you got to remember, people are going to have a lot more money just with the economy recovering, with inflation down, with reduced taxes and just things like that. If we look from the low to the high, and I said it's a 38% on the dot, it's a 382 on the dot, it doesn't get any better than that. And a 382 retracement usually always equals a 1618 extension. So if we use A to B is equal to CD action, which is a harmonic pattern, it is the original harmonic pattern. All the other ones, Back, Gartley, Cypher, Butterfly, Shark, all that other stuff, they're built off this. So this is the grandfather of them, to be honest with you. That's why you see me still always having to include it. So yeah, so there we go. So you're seeing that 119, very aggressive. I get it, but hey, it's live. You just have to break and close above, like I said, that little ceiling right there, as opposed to some of the others that don't have a ceiling, which might cause this ceiling to just get completely blasted through. All right. Capital One, that was Wells Fargo. Capital One, okay, Capital One, rinse and repeat, and the beat goes on, okay. Bearish engulfing candle. Notice how it's the same exact thing on all these financial institutions. Some have a ceiling, some don't. Bearish engulfing candle, followed by doji, followed by candle closing above the doji and the entry, the confirmation and the entry. Traders who would have saw this would have entered at 188, and it's already at 211, would have been killing it. It looks like... So it's not oversold. Yeah, there's a lot of momentum. 72 on the RSI. Let's take a look at the volume real quick. And a lot of volume. This is when you kind of like want to be in a trade when there's a lot of volume like that. Very, very, very beautiful. Tells us that they are in this thing, and they are in it to take this top off. It's already higher. It already has a higher high than it just doesn't have the higher close. See, it's right at it. It's right at it. But same thing. Once that ceiling comes off, that's the resistance. That's the ceiling. Once that ceiling comes off, this thing is over, off to the races. and some very, very, very high projected targets, 288, or could even be higher. I don't even remember if I wrote it from this guy or this. I think I wrote it from this level here. I wrote those projections. Yeah, this level of support here, this little shelf sitting here. I think that's what I drew that off of. Could be even higher, but yeah, they duped us. They really got us on that. I think they wanted to scare us away. And trust me, that volume, they were in there. They're buying it. While they're, having us be skeptical, market correction, a market crash, just on and on and on. Last but not least, Citigroup, same thing. And the beat goes on, rinse and repeat. Bearish engulfing candle, followed by doji, followed by trigger bar entry, closing above the doji. Traders would have had a beautiful month, one of the best months in their life, trading from 75 to 84. And this thing is just getting started. But there is a ceiling. There is a ceiling. Okay, got to get out of that. Got to break and close up out of that just to be sure, because there is a chance of that having something to say about this and kicking this thing back or consolidating for a while. You don't want to be a part of either of them. Just want something you probably want to just keep your eyes on and then just see what happens. You know where your signal will be when it's time to do that. Target wise, we will go ahead and use this low as a starting point here. There's no reason to come way back here. This is irrelevant at this point. Okay, this guy's irrelevant. This is the starting point. Using the extension off of that, grabbing the extension, going from the low, coming to the high, and coming back, right, to determine what the extension might be. Remember, we're always going to look at the retracement. The retracement determines the extension. This is about 50-something%, so we're going to be in the 1414 range, but let's measure it for good sake. So from the low little wick right there to the high, up he wicked down and got the 618. Should still get us into the 1414 area too, though. And we'll finish that off with A to B is equal to CD action, looking like this guy right here, A to B being equal to C and D. Isn't it amazing how all of these that I talked about, 1, 2, 3, 4, 5, 6, 7, all had the exact same thing? Right? I said we end up right around the 1414 extension, right? So there we go. So had to go burn through those and talk about them since no one else will. You can't rely on the news to do it. You can't rely on these experts or anybody like that to come tell you exactly really what's going on and what has happened and show you what the possibilities are and what needs to happen before XXX happens. But we will do that here at the Harmonic Trading Club. So if you like this video, give it a thumbs up, share the video with any trader that you know that this could help, or anyone that's asking questions and could just use, a different set of eyes. Okay. Subscribe to the channel if you're not subscribed. I could really use your subscription as I continue to try to grow this channel out. Okay. And last but not least, if you're interested in anything that I had to say on this video, we have it all in our lessons under the Harmonic Trading Academy playlist. So head over there, all free on the house. No gurus, no mentorships, no $10,000, no Discord. You want to learn what you saw me do here? It's in that playlist, every single bit of it times 100. Okay. So that being said, you guys be good. Take care of yourself, and I will see you on the next video. We're out.